Hello everyone, Renjith this side. So in this video, we will be deep diving into one of the most powerful and popular technique used in swing trading, which is the Fibonacci trading strategy. Now we will explore how to apply this strategy on National Stock Exchange of India, but it can be applied on any stock exchange. Now we will use the real data, current year 2024. Now first let's understand what is the Fibonacci retracement is. Fibonacci retracement is based on the key numbers identified by Leonardo Fibonacci, which appears in nature, architecture, and yes, in financial market too. These numbers translate into percentages that traders use to predict the potential reversal points in the stock prices after a significant movement either up or down. Now let's understand the basics of swing trading with Fibonacci. Now swing trading involves holding positions for, let's say, from couple of days to several weeks, and our goal is to capture the swings in the market prices. Now the key to mastering this is by identifying the potential reversal points where we can enter and exit the market for, say, a maximum gain. To apply the Fibonacci retracement, we will be using Python for its because of its powerful libraries and ease of handling financial data. So we will obtain our data from Yahoo Finance library. Now this allows us to conduct through the backtesting, which also ensures that our strategy holds on different market conditions. Now I will come on to the coding part just after this overview. Here we will see how we can apply our strategy. We will choose a popular stock from the NSE, and then we will run our script to detect where the stock hit the Fibonacci levels in the year 2024. Our script will also highlight potential buy and sell points so that we can aim for at least 10% of return, and then we will also implement a stop loss of let's say 2%. Now one of the most important part is the backtesting. Backtesting is really crucial. It basically simulates how our strategy would have performed in the past or in the history. By backtesting, we can see that not only just the potential earnings, but we can also understand the risk and refine our strategy before using it with the real money. About result and analysis, we will go through the graph that will mark our buy and sell points, and then we will discuss everything behind each decision that was made by the code, and then evaluate our performance. Now what we have done over here, we have called the Y Finance library. We have also imported the holiday calendar, but you can also define your own calendar, or let's say for here what we have done, we have added a new year as the holiday, and then you can add your own specific holidays based on your country specific public holidays. Now these are the Fibonacci levels. We have 0.236, 0.382. So these are very important Fibonacci levels, and then we have given the color to each values. I will show it on the graph, and then we have loaded the data from Yahoo Finance from 1st of January to 31st of May, and this is a calendar that we have called over here. After that, we have returned the data. The most important part, analyzing the stock data and then plotting that buy or sell signal. Loaded data based on the ticker, the maximum price, the minimum price, and then we have passed the maximum price and minimum price to the Fibonacci levels to mark those price on the graph. Now we have buy price whenever the price is touching the 0.68 value, so we will buy it, and if there is 10% of that price of the buy price, we will sell it, right? And then we have also placed 2% of stop loss. Whenever the price hits a stop loss of 2%, it will sell. Now let's go to graph part. For each, these are the lines that is being created for each level. Percentage, now percentage returns will be calculated, purchase price will be calculated. Now this is for each data price in these items, or let's say the data items, the graph will be created. Now let's go to what the Fibonacci retracement graph has been created by the code. So now if you see, the first buy was suggested on 2nd of January 2024, then again there was a sell. See, now this is the thing, your strategy might not give you profit every time, so it will give you loss as well, but it will try to minimize your loss. Then again it got bought, then but again it got sold at the loss. Now again it bought it somewhere over at this price, and then it gave you 10%, or let's say more than 10% of return. So basically it bought on 24th of January, on 15th of Feb it sold the stock, right? So basically it gave a return of, or let's say the total return percentage of 18.32, which is really good. Within let's say within 1 month or 2 months, it gave a good return. Within 1.5 months it gave 18% of return, which is really good. When we talk about the tip, so the first tip is combined with the other indicators. use Fibonacci in conjunction with other indicators like, let's say, the RSI, MACD, to confirm the potential reversal points, because sometimes this might not be the only the indicator or the strategy that might help you. So you have to add couple of other indicators like RSI or MACD, just like I mentioned. Now, the second thing is be patient, wait for the price to clearly reach and react from a Fibonacci level, before making any kind of a movement. Manage risk. So always set up a stop loss to protect your investment from a significant loss, because sometimes if the market is too volatile, you might not be able to sell the stock at that particular point of time. Try to have a performance overview or review what your overall portfolio is doing, and then always adjust your strategy based on the market conditions. Now, last but not the least, learn continuously. The market is always changing. Keep learning and adapting to the new strategies and technologies. Remember, the key to success in trading is consistency, risk management, and continuous learning. That's all. Thank you so much. Have a great day. Bye.